just did it again. Another wave of tariffs, but this time China takes the biggest hit. Tariffs of over 50% on Chinese goods. This isn't just a trade move, it's a full-scale economic attack. Beijing won't stay silent. They are preparing a counterattack. But how far will they go? Will they raise tariffs on American products? Cut down investments in the U.S.? Or something even bigger? And this isn't just about China, and the U.S. global markets are already feeling the shock. The offshore yuan is dropping. Japan, Vietnam, and Taiwan, countries deeply tied to China's supply chain, are bracing for impact. Investors are panicking. Wall Street is watching closely. The question now is, how will this change the global economy? In this video, we break it all down. China's response, global trade effects, market reactions, and the bigger question, are we heading towards another trade war? Let's find out. The numbers are staggering. Over 50% tariffs on Chinese goods. That means higher prices, supply chain disruptions, and a serious blow to China's exports. But why now? Why such an aggressive move? President Trump says it's about protecting American industries. He claims China has been taking advantage of the U.S. for decades, manipulating its currency, stealing intellectual property, and flooding the market with cheap goods. And now, he's fighting back. But here's the problem. Tariffs aren't just a weapon against China, they affect everyone. American companies rely on Chinese materials. American consumers buy Chinese products. A 50% tariff, that's not just a tax on China, that's a tax on the U.S. too. And the ripple effect doesn't stop there. China is the second largest economy in the world. When China slows down, global trade slows down. Investors panic, markets react. Just look at what's happening already. The offshore yuan is sliding. The global supply chain, cars, pharmaceuticals, agriculture, is being reshaped overnight. Japan, Vietnam, Taiwan, major players in the region, are now caught in the crossfire. And let's not forget, China won't take this lying down. Beijing is already preparing its response. Some say they'll hit back with tariffs on American farm goods. Others warn of something even bigger, a complete shift in investment away from the U.S. So what happens next? Will this trigger a new trade war? Or is it just another political move before the elections? One thing is clear. This is only the beginning. The shockwaves are spreading fast and far. Across the Asia-Pacific region, markets are feeling the intense heat of these economic tensions. The offshore yuan? It's sliding rapidly, nearing record lows. Investors? They're scrambling to adjust their strategies in real time. But here's the thing. China isn't the only one bearing the brunt of these trade war effects. Take a closer look at Vietnam. It's one of the fastest growing economies in the region, and its growth has been heavily reliant on global trade. If supply chains begin to shift away from China, there could be an opportunity for Vietnam to capitalize on this shift, at least in the short term. But on the other hand, Vietnam could easily become the next target for tariffs. These disruptions don't just affect China alone. They send ripples throughout the entire global system, impacting economies far and wide. Then there's Taiwan, a critical player in the global semiconductor industry. Taiwan's massive production of chips is the backbone of countless technologies around the world, from smartphones to electric vehicles. If the trade disruptions continue, any interference in Taiwan's ability to manufacture and export semiconductors will have global ramifications. We're talking about a breakdown in the supply chains for products that keep the world running. The consequences could be felt in every industry, in every part of the world, as the global economy depends heavily on Taiwan's chip production. Japan is no stranger to these trade uncertainties either. The Japanese stock market is notoriously quick to react, and it's already feeling the effects. Some sectors, particularly car manufacturing, are taking a hit as tariffs disrupt trade and production. However, there are other sectors that are seeing an uptick, like financial services, which have posted modest gains. But even so, the broader Asian markets are down. In short, Japan's market is a mixed bag of both positive and negative reactions, reflecting the volatile nature of these trade disputes. Australia, too, is watching these developments with great concern. As China's largest trading partner, Any slowdown in the Chinese economy will have a direct impact on Australia's trade and commodity exports. The fluctuations in commodity prices, iron ore, coal, and even agricultural exports are all tied to China's demands. And with every new policy change from Washington, the economic tremors are felt across the Pacific. Australian businesses and policymakers alike are nervously eyeing Washington's next move. But here's the real question that looms. How does this situation end? Will companies start moving their factories out of China to avoid tariffs? Will countries in the region begin to shift their political and economic alliances to protect themselves from the fallout? Or will this simply be a temporary storm, one that eventually settles back down as trade policies adapt? One thing is for sure, though. The Asia-Pacific region isn't just watching this unfold from the sidelines. It's right in the heart of it, caught in the middle of this growing economic conflict. And whatever happens next, whether the situation escalates further or stabilizes, will undoubtedly shape the future of global trade for years to come. These decisions and shifts will affect countries and markets in ways we're only beginning to understand. The ripple effects will continue to be felt long after the headlines fade. The region's economic destiny is being shaped right now. The markets react instantly, no time to hesitate. Traders, investors, governments, everyone is watching. The first shockwave? Asian stocks take a hit. The broader market drops by 1%. Uncertainty spreads fast. But look closer. Japan's Nikkei jumps 3%. Why? Because some investors see an opportunity. The weaker yen? Great for exports. Automakers, tech giants, and financial firms, all benefiting from currency fluctuations. China's yuan? Different story. It hovers near record lows. Investors are nervous. If the yuan weakens further, inflation could rise. Imports get more expensive. The cost of living increases, and Beijing, watching closely, ready to intervene. Meanwhile, commodities react too. Gold prices surge. Why? Because uncertainty drives investors to safe haven assets. Oil? Mixed signals. Global demand fears push prices down, but supply chain concerns could send them back up. And then there's the U.S. stock market. Investors on Wall Street are calculating the risks. Tech giants like Apple and Tesla, they depend on China. A full-scale trade war could shake their profits. But some American manufacturers see this as a win. More tariffs mean less competition from Chinese imports. The Federal Reserve, watching every move. Inflation, interest rates, economic growth, it's all connected. If tariffs drive prices higher, could we see another rate hike? Or will the Fed hold steady? The global financial system is shifting fast. Investors are repositioning, governments are negotiating, markets volatile. And one thing is clear, this is just the beginning. China's response is calculated, deliberate. It's not just about imposing tariffs. No, this is about sending a message. Beijing won't let Washington's tariffs go unchallenged. The retaliation plan? It's already in the works. First, let's talk about tariffs. China's not going to hold back. They're considering raising tariffs on U.S. farm products, soybeans, pork, and more. These are critical exports for American farmers. If China acts, it could hit them hard. China is also looking at other ways to hit back. They're considering restrictions on U.S. technology. Think about it. American tech giants like Apple, Intel, and Qualcomm depend on the Chinese market. A ban on their products? A devastating blow. But it doesn't stop there. China has other tools at its disposal. It could impose stricter regulations on U.S. companies operating in China, making it harder for them to do business. This could make it difficult for major corporations to continue their operations without facing significant financial losses. And what about China's Made in China 2025 plan? That's a big piece of the puzzle. Beijing is focused on becoming a technological powerhouse. They'll likely double down on their investment in artificial intelligence, robotics, and telecommunications, areas where they want to reduce dependence on U.S. technology. Another critical area of retaliation? The Chinese government could target U.S. agricultural exports, not just for economic reasons, but for political leverage. These exports are highly sensitive politically, especially in swing states like Iowa, which rely on China as a key trading partner. China is also mindful of its domestic audience. Public sentiment matters, so Beijing needs to appear strong, assertive, and committed to standing up to Washington. The government has to strike a balance between appeasing the public and avoiding drastic economic damage. So what's the ultimate goal here? For China, it's about maintaining its global economic influence while asserting its sovereignty in the face of what it sees as unfair trade practices. Beijing's message is clear: don't underestimate us. As this trade war continues, we can expect more retaliatory actions. China's playbook is long, and it's ready to use every tool available to protect its economic interests. But the question remains, how far will Beijing go? How will Washington respond? As China prepares its retaliation, the question arises, how will the U.S. allies react? The global community is watching closely, as this trade war impacts more than just the U.S. and China. It affects economies worldwide. Let's start with Australia. Prime Minister Anthony Albanese made a strong statement. Australia will not retaliate. In fact, they're staying neutral in this trade dispute. Why? Australia relies heavily on both the U.S. and China for trade. They don't want to risk souring their relationship with either side. Australia's trade relationship with China is massive. China is Australia's largest trading partner, particularly when it comes to natural resources like iron ore, coal, and natural gas. Retaliating against China would risk significant economic consequences. On the other hand, Canada and Mexico have a slightly different stance. These two nations have been temporarily exempted from some of Trump's tariffs. They're not part of the immediate fallout, at least not yet. However, the situation remains fluid. Both Canada and Mexico are closely monitoring how this trade war develops. While they've been temporarily spared, they know that the situation could change at any moment. These countries are trying to maintain strong relations with both the U.S. and China, but the pressures of the trade war might force them to pick a side eventually. Meanwhile, the European Union has expressed concerns about the long-term effects of the tariffs. EU officials worry that the U.S.-China trade war could damage global trade systems. They're also concerned about the ripple effects it might have on their own economy, particularly in industries like manufacturing and technology. The EU is trying to avoid being dragged into this conflict. However, with many European companies doing business in both the US and China, the economic pressure is mounting. There's no easy way out for them. They have to navigate the delicate balance between supporting free trade and protecting their own industries. In the end, US allies face difficult decisions. Some are staying neutral, others are hoping to avoid direct confrontation. But all of them are aware of the far-reaching consequences. As this trade war escalates, their reactions will play a critical role in shaping the future of global trade. As we wrap up this analysis, it's clear that the trade war between the U.S. and China is far from over. The tariffs imposed by President Trump have created a new chapter in global trade, one with unpredictable consequences. The tariffs on Chinese goods exceeding 50% are especially significant. China, as a global manufacturing hub, will undoubtedly feel the pressure, and it will be crucial to watch how Beijing responds to these economic challenges. With billions of dollars on the line, the stakes are high, and the ripple effects will be felt far beyond the US and China. China's response to these tariffs will set the tone for the coming months. Beijing has shown it's ready to retaliate, and their economic strategies will be key in navigating this turbulent period. How China chooses to act could determine the future of global trade and the broader economic landscape. The U.S. is also facing a long road ahead. The tariffs may offer temporary protection for some sectors, but the bigger picture reveals more challenges on the horizon. Over time, we may begin to see how these trade policies affect the overall economy. Key sectors, such as technology and agriculture, may experience disruptions that could take years to recover from. The broader implications for global markets are immense. The disruption to supply chains, the fluctuation in currency values, and the uncertainty surrounding future trade policies will keep investors on edge. However, with the right strategies, there may be opportunities amidst the chaos. Investors who stay vigilant and adaptive might find new avenues for growth and profit. Looking ahead, it's clear that this trade war is only one part of a much larger story about global economics. As countries adjust, new alliances may form, and old ones could be tested. The question remains, will we see a resolution, or will tensions continue to rise? The future of global trade is uncertain, but one thing is for sure, change is coming. Whether it's a new world order for trade or simply a shift in the balance of power, the world is watching closely. Thanks for joining us today. Stay tuned as we continue to track the latest developments and break down what it all means for the global economy. If you found this video insightful, make sure to hit the like button, subscribe to Econ Atlas, and ring the bell so you never miss an update on the latest economic trends. Drop a comment below and let us know what you think about the ongoing trade war between the U.S. and China. What do you think will happen next? We'd love to hear your thoughts. If you want to dive even deeper into this topic or stay updated on global trade and economic policies, make sure to check out our other videos on the channel. And as always, don't forget to share this video with your friends and colleagues who need to stay informed about the ever-changing global economy.